Hi, welcome back to another edition of Lippers Fund Flows Insight. My name is Tom Roseen. Thanks for joining me today. I'll be reporting flows for the weekend of Wednesday, August 16th, 2017. Investors actually put about $9 billion in the conventional fund business. We will talk about ETFs a little bit later on as well. But about $9 billion, but it's a very conservative week, and we'll show you a little bit more detail in a little while. But basically what we found is that investors really got risk averse, obviously after North Korea said they were going to send a missile strike to Guam, and President Trump got very, if you will, vociferous in how he would respond. And people took this very seriously, and markets on Thursday basically took a big dive. Friday came back a little bit, but basically over the weekend there was a little bit of cooling of rhetoric. People kind of stepped back. We even had North Korea basically said, okay, we're not going to bomb you. We'll reserve bombing you later on, but they're not going to do it now. And basically I think investors breathed a sigh of relief. That said, we had some good news come out of the Fed. When the Fed minutes came out, basically they showed that they are still thinking about unwinding their big balance sheet. However, they are taking a more cautious approach to interest rates, which boded better for equity funds and equities overall. So we saw basically Dow scoot back up over the 22,000 mark, and things were looking pretty strong. However, again, as I said, investors remained risk averse because of all the things that happened in Charlottesville, Virginia. Some of the president's comments, still about Korea or North Korea, and I think people are just kind of taking away, especially since we're at the latter portion of the second quarter earnings season, and investors are really kind of paying attention now back to politics and those type of things, economic statistics that are coming out to make decisions on buying and selling. Let's take a look at our macro groups to see how that panned out this week as far as flows go. Equity funds saw about $5.4 billion in outflow. Not a lot, but again, an outflow nonetheless. Taxable bond funds saw about $846 million in inflow, so they had a pretty good week. Muni bond funds took in about $500 million as well. And money market funds is what I was saying about the conservative approach that they basically took. Money markets saw about $13 billion in net new money come into their group. Let's take a look at the group's breakdown one by one. Let's take a look at equity funds first and see what happened in that arena. Basically, we saw for the third consecutive week that we had negative performance on equity funds, but only to the tune of about 0.30%. So it wasn't really that big of a downfall. It's because, again, after the Fed came out with maybe more dovish news, investors kind of cheered that a little bit more. So we saw the markets rise up. But again, we had a small loss. Basically, we saw about $5.4 billion in outflows. It's the 8th consecutive week that we've seen outflows from equity funds. And how it broke out, domestic equity funds has been the tune for many weeks going on. $5.1 billion in outflows for the domestic equity funds. It's the 33rd consecutive week they've seen outflows. That's just a huge number. However, and it was only on a negative return of 0.33%. If we take a look at non-domestic equity funds, we saw about $230 million in outflows, but it wasn't really that big of a story. I'd say the first week and three that we've seen outflows, and this one was only a negative return of about 0.24%. So really not a big difference in the return numbers, but investors are still, if you will, favoring the non-domestic side, although they just experience outflows. If we break this down a little bit deeper, we saw large cap funds actually take the brunt of all outflows. They took about $3 billion out of their coffers. And then we took a look at global equity funds. The global equity funds saw outflows as well, about $248 million. And then if we looked at international equity, it actually had a little bit of inflows in the hundreds of thousands, and so it wasn't really that much to report. Let's go ahead now and turn our attention, though, to equity funds and see what happened in that arena. For the first week in four, we actually saw outflows, $535 million. What we saw was that if you look at the top of the thing, we saw the Schwab U.S. Broad Market ETF taking about $630 million. And so investors were becoming a little less focused and small or large and said, listen, I'm going to buy the whole market, see what happens. iShare Core, S&P Total U.S. Market, again, taking in money, $623 million. And if we look at the downside, we saw the iShares Russell 2000 lose about $626 million. Interesting enough, though, if we take a look at the Financial Select Spider Fund, it also lost $441 million. And I think this is just that concern of the president losing some of his ability when he lost members of the business council that he created, 2 different business councils that he closed, really is because the CEOs walked out of the business council meetings and said they wouldn't attend anymore. But anyways, I think people are kind of questioning whether he can get some of the legislation through that he's been talking about. And so one of the things that we noted this week is the first week in 33 that we've seen outflows out of non-domestic ETFs. So even on the global scale, ETF investors have been, buying up and buying and buying 33 consecutive weeks, 32 consecutive weeks prior to this week. And this 33rd week, they saw outflows. So they saw a little bit of it. It wasn't a lot of money, though. It was basically in the tens of thousands of dollars, so it wasn't really that big of a deal, but negative nonetheless. Let's go ahead and take a look at our fixed income universe to see what happened in that group. For the second consecutive week, we've seen inflows, $847 million into the conventional fund business for fixed income funds. It is the second consecutive week that we've seen negative performance, but this time only to the tune of 0.03% loss, so it wasn't that big. At the top of the group taking in money was corporate investment grade debt funds, about $1.9 billion, 11th consecutive week that they've taken in money. And we also saw TIP funds, so Treasury Inflation Protector securities, and really we're talking now they're no longer just treasuries. We have other groups that are inflation protected in there. But basically they saw about $5 million in net new money come into that group, but it's the 41st consecutive week that they've taken in money. So somewhere people still think that there is a possibility of raising interest rates, even though the Fed has got a little bit more dovish. High yield funds actually lost money, about $935 million left the high yield funds as investors became a little bit more risk averse in that arena. Let's go ahead and take a look at the ETF side of the fixed income universe. And we saw about $469 million go into the ETFs in that group, in fixed income funds, 6 consecutive weeks that they've taken in inflows. And at the top of the group, we saw the ProShares short fix short-term futures ETF taking about $670 million. And then we saw the iShares Core US Aggregate ETF taking about $230 million. And so, again, people were doing a little bit different stuff as far as they're playing the VIX. It's not really a fixed income instrument, but it does show up on our fixed income side because of their large holding of bonds in there. But if we take a look at the bottom side of it, just like on the open-end universe, we basically saw iBox dollar high yield corporate bond fund lose about $388 million. So there was the outflows there. Let's take a look at what happened in the muni bond fund universe now. Muni bond funds saw about $487 million coming out of their group, about the 5th consecutive week in a row that it's taken in money. It's the first week in 5, though, that they've actually had negative performance, but again, small negative performance, minus 0.04%, not anything to really be concerned about. Basically, what we saw was national munis took in about $564 million, and the rest would obviously go to single state. It's the 5th consecutive week, though, that national munis have taken in money. And really, this is back to that issue. Is the president going to be able to move his agenda? Is that pro-business, cutting taxes? Is he going to be able to do this with kind of all the hoopla that's been going on in the White House over the last several weeks? Let's go ahead and now turn our attention to money market funds. Money market funds for the 4th consecutive week saw inflows, $13 billion this week, a little bit less than we saw last week and the week before. But again, $13 billion is a nice chunk of money. Taxable money market funds took in about $13.1 billion. And of that, how that broke out, institutional investors put in about $6.2 billion, while retail investors put in about $6.9 billion. And then we take a look at the tax-exempt money market funds. They lost about $68 million. So again, not a big story there. Basically, that brings us to the end of our presentation. And what we heard on Tuesday is President Trump actually took his first step to address infrastructure spending on Tuesday. And this may be something that needs to move forward for him to be able to start putting some of his economic agendas ahead that both sides of the aisles can probably get involved with. I don't think you're going to have a lot of Democrats or Republicans saying that we can't spend money on our own infrastructure. This may be a good boon for the government overall, the president's agenda, and maybe even the equity fund universe. We'll obviously learn more as we go on. We're getting close to the earnings end of the earnings season, so I think we're going to see a lot of people paying attention to more politics and a lot of people paying much more attention to the economic figures that are coming out, so we'll keep a close eye on that for you as well. If we didn't cover any of the areas that you needed to have cover, you can actually go to our site, www.lipperusfundflows.com, and do a deeper dive yourself, or you can join us next week where one of our analysts will talk about the flows trends of the week. Thanks for joining me. My name is Tom Roseen, wishing you the best in your wealth planning and creation.